Aloha and welcome to Java. Thank you all kindly for joining me. It is August 19th, 2024, and it's Monday, so I hope you had a wonderful weekend and it's starting off to be a wonderful day for you. So, with this, we've got a few things to go over prior to the market opens. Let's get into it. First, starting with our favorite risk indicator, the MMRI, right about 247 right now, still in high territory, but no major moves, no major spikes. Now, we've got a couple of things going on with the two main elements of it, which are the 10-year yield and the relative strength of the dollar. So, 10-year yield rising a bit, but the relative strength of the dollar dropping, and this is on the anticipation of rate cuts. So even though they haven't cut the rates yet, the dollar is already reacting. Okay, so with this fear greed meter, we're in the fear territory still, but the basically the investors are still in here heading back towards that neutral and more towards the green side of this, if you will. So what's going on is basically the market is relatively steady right now. Everybody's waiting for the rate cut decision towards the end of the week in September to hear what he says in Jackson Hole. They want to get these clues about the timing and also the amount of the rate cuts. So, with this sentiment, as it says here, when they do rate cuts, it means a weaker US dollar. And when they cut those rates, make the dollar weaker, everything priced in dollars goes up in price. So that would create a bull stock market, again, green, and stronger other relative currencies. And I'll go into that in a bit. But right now, we've got basically stock market is in the green. Oil is down a bit, and gold also seeing this above record highs. 2,540 right now is the level that it's sitting at. And we've got the futures also in the green. So let's go into this a little bit more. First, the calendar, not too much. We've got a Fed president just prior to the market open. They can help manage anything they need. We've also got the leading economic indicators coming out at 10 a.m. Now, these numbers really, they skew the numbers, so they're nothing more than basically tea leaves that the Fed is able to read any way they would like and interpret and move forward with whatever decision they would like to, because it's all about what they expect anyway. Okay. I'm going to hit with earnings that we expect earning reports right now. We've got these four today, prior to market open, after the close, and then Tuesday before open. Lows, which is a real indicator of the real economy, whether people are improving their homes or not, and keeping an eye on XPing. They make also electric vehicles, and we'll see how that demand is working out, if it's slowing down or not. Okay. I want to go back a little bit to the rate cuts and how they affect the currency. So everybody watching Jackson Hole, as the dollar drops, the yen and the euro rise, so they get stronger. As they get stronger, it's just like the dollar with the US market. As the dollar gets weaker, market goes green. So with these two, they're getting stronger, so their markets are dropping. Also, the sterling's hitting a 1-month high. So because the dollar's dropping a bit, it's floating these others and pressuring their stock markets. Okay, so we're going to see this throughout the day. So going into a couple of other things that are a little bit related, we've got Warren Buffett, Berkshire Hathaway. The latest move, basically, they're purchasing short-term US Treasury bills. Basically, the yields on these is what he's looking at, playing front-running the Fed, if you will. So I would like to bring back one last thing about the yen. They're talking about the yen carry trade, and I've heard a few things from different areas. It is not finished. They've done a couple of runs of it. However, I do expect them to pause right now. We are expecting to hear from Uedo on the 23rd as far as their policy. However, with a weaker dollar pushing up strength in the yen, I do not expect them to basically unwind a bit more of this because it's making their yen too strong, and that can also cause an issue. So what we're watching is basically a leveling out of the currencies as they're all floating to the bottom of value. Okay. So with this, we've seen this all happen back when it started and in the past. Okay. So we've got a very good example from back 1971 when the US dollar came off of the gold standard. Everyone was told that it was supposed to be temporary. As far as I know, the US dollar has not gone back on the gold standard, and it basically has ruptured a good portion of the system, and this feeds their end goal. So, since it is not on a gold standard any longer, there's nothing tying it down. That has enabled the central banks to continue to manipulate currencies, markets, inflate as they would like, and inflation is silent theft. So if you're new here, just trying to give a little bit of background on that. And if you don't quite understand how all of that works, please just stick around. Feel free to ask questions in the comments, and happy to help out however we can. Okay, so going back to the Fed, we've got Jay Powell here. He's got two mandates that are out on the surface. The first one, price stability. So now that they're saying inflation is coming back down, they're going to have to watch their second mandate, which is employment. So we've got startup failures up by about 60% right now. Businesses that can't be started with all of the costs that are coming in, it's almost impossible. We've also got workforce reductions happening. This is saying 25 large US companies, but it's much more than that. So under the WARN tracker, it's WARN, the WARN tracker is showing basically companies that are looking at or announcing layoffs but have not laid off yet. So it's a good indicator going forward. We've also got companies like MasterCard announcing they're cutting about 3% of their workforce globally. So with all of this unemployment coming in, we're sitting at the front of a wave of unemployment. And that is what will move to the rate cuts. Okay. So a couple last things I wanted to bring up. The NED stands for National Endowment for Democracy. And this report, as this says, it's just an opinion, has replaced this three-letter agency in covert activities, basically acting as American white gloves. There's this report is put out by Chinese Foreign Ministry, so you have to take it from the view of where it's coming from. But they're elaborating on the conduct of this group, the NED, that the programs are run, and this is correct, under the guidance of US State Department and embassies abroad. Okay, it is funded by the Department of Defense as well as also different government programs and Congress itself. So they're saying that it's basically an NGO supporting democracy abroad, and in fact, it carries out subversion, infiltration, and sabotage across the world. So if you're interested in looking into that, just something else I thought I would bring up. And this is talking about World Humanitarian Day. This is on a different, completely different subject. But rather than just a World Humanitarian Day, I would just like to use this as a reminder to pay it forward if you can. If you can help people, the most important thing is community. Be there for somebody, try to help out. If you can pay it forward, donate to a cause if you can. Know a lot of your traders if you have the means to help forward. If not, then just help with even just encouragement, and positivity can make a difference. So with that, I wish you all a wonderful day. Thank you so much for being here again. And until I see you again, my friends, stay free.